Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
What's happening, beautiful people? Good morning, good day, good evening, wherever you are. HR is a very hot topic this year, and I had quite a few requests to invite an HR professional to the show and ask her a few burning questions about the industry. My guest for today worked in the front line for many years, hiring and firing great talent for the financial markets. Starting last year, she moved to London, and she's currently working for one of the biggest recruitment agencies in the financial markets. Beautiful career woman, specialized in HR, and one of the top recruiters in the financial industry. Ladies, gentlemen, traders, please help me welcome my guest for today. From the heart of London, Emma April. Hi, Emma. How are you?
Hi, Andrew. I'm all right. How are you?
Always good, always good. How is 2021 for you so far?
This year, okay, it's good. You know, we're picking up. Our mental health is better, knowing that, you know, we're going to get out of lockdown soon. Things are going to start opening. So, you know, things are getting there. We're getting better. And I think the future is bright. Very bright.
Did you get vaccinated yet?
Oh, no, of course not. Not yet.
But you're still in lockdown, yeah, in UK?
Yeah, we're still in lockdown. Completely out of lockdown would be June 21st. So I think we're all looking forward for that.
I saw Boris Johnson's statement the other day. He's doing a great job so far. Now, Emma, how was 2020 for you from a professional point of view or a personal point of view?
Okay, if we're taking professional-wise, I think a lot of people, did lose their jobs, and it was a very rough time for them to obviously get their heads around this whole thing that was happening. No one knew anything about it in the very beginning. And due to the fact, like, also losing your job and being locked up at home for so many months, you just didn't know what to do. So people had to start getting creative, gardening, just doing DIY stuff in your house. It really took a toll on a lot of people, not just for people who probably did lose their jobs, but just people who are even major social beings as well, because humans are social beings. We need that interaction. So professionally, is like for people who enjoy going to the office as well, it really did have a major effect on them. However, I do know loads of people who did prefer as well working from home, and they were more productive with that. Many people did have an issue finding a job during the whole pandemic period. A lot of unemployment went on and is still going on. From a personal perspective, yeah, I mean, I had to really check my mental health as well, not just me. I mean, I think millions of people as well. So I knew I had to put my mental health first. And then I knew as soon as I had that straight, then everything else would have been good too. I was blessed to still have a job during the pandemic. And I'm very grateful for that. And yeah, very grateful.
Yep. How did the 2020 affect the recruiting industry for the financial markets from your point of view? Was there any change?
During the beginning of the pandemic, because I worked the Cyprus market, I think the first month, so when it all went into lockdown in March 2020, No one really knew what was happening. So recruitment just sort of like stopped completely. The world just went silent in general. And by the beginning of April, May, the Cyprus market started picking up again a little bit. And offices, companies, clearly, they started working from home. And the good thing, Cyprus started onboarding new candidates from home. So it was easier for us to recruit for our clients. So the first month of the pandemic was kind of crazy, I think, in general for everyone. But then it didn't really affect us as much because we were working the Cyprus market, and Cyprus in general, because of the population, okay, like it did go into lockdown, but people just, they were just moving as if nothing has happened, but working from home. So we didn't see a major thing. However, we did started seeing a difference in, let's say, onboarding new employees to clients, to companies, sometime in October of 2020. People were hesitant to actually leave, let's say, their current companies if we were headhunting, in case, we did go back into lockdown and, oh no, what if I do change my job and then we go into lockdown and I'm not, going to get furloughed, let's say, get help from the government. So people were a bit hesitant in moving more in October, let's say, than in the middle of the pandemic, like the major parts in the pandemic. Then by January, it was a bit slow again in January, but then end of January, it's gone sky high. People want to start finding work. I think they're more happy to start working again. So yeah.
And one other reason why I think the industry started booming in January was the Bitcoin, because the price of Bitcoin started going sky high. Therefore, the companies probably got an influx of clients. Therefore, they needed a bit more stuff. Is that correct?
Yes, but then again, not all companies do work with cryptocurrencies, and it's more Forex and CFDs. So yes, I do believe a lot of people wanted to start finding jobs in financial services because of, like, let's say, a little bit of these things. A lot of things can, yeah.
So overall, it wasn't really bad. It wasn't catastrophic for the recruitment industry in the financial market.
Not as much for the Cyprus market. If we're talking about, let's say, recruiting in London and everything, it did kind of stop a little bit. But us as a company, thank God, we didn't see this major issue. We just carried on like normal.
Right. What would you say is the most valuable lesson we've learned in 2020 as employees, as recruiters, as companies?
I think you really have to put your mental health first. Not everything is literally as stressful as we think it is. Things are kind of basic, and we as humans, we just make it more than it actually is. And wealth is really health. Like, we're so lucky for the ones who didn't get sick, who, that we have a really good, let's say, health system, and staying healthy, that is important.
True. Very, very important. I don't know. Many people complain they went a bit crazy during the lockdown. I'm fine, to be honest.
Yeah, I was fine. Of course, I had my days where I was bored and I didn't know what to do and all of these things, which is normal. But I really, I enjoyed it. I found new hobbies. I got creative with different things, reading books. It was good. It was a good self journey, let's say, finding things about yourself.
Yeah, I started effects when the lockdown started, for example. That's when I started. Now, let's move to the true reason why I wanted you here today. Apart from being very beautiful and knowledgeable, there are some things happening in the online environment that I'm not very happy with, and I need the opinion of a professional. Are you up for it?
Yeah, let's go. Let's see.
All right, let's crack on. How important is the LinkedIn profile of a candidate from a recruiter's perspective? Does it matter more than the CV?
Both are very important, because as recruiters, we don't want to see a difference, obviously, in your CV to your LinkedIn. It would be great if candidates could also specify the exact details, that the duties and responsibilities that they do during their time at their current company or in the previous companies. That way it gives us a better insight for us to approach them more. Your CV as well is very, very important. Dates you started, dates you finished, the places you have worked there. So yes, your CV and your LinkedIn profile has to match. It has to match, because then we then think, okay, what's going on? What's wrong?
True. So if a candidate has both a CV and a LinkedIn profile, they're increasing the chances of finding a job, which takes me to my next question. What do you think about the story feature, which was added on LinkedIn recently? Is that something that was really needed, Emma?
To be honest with you, like as a recruiter, and I know from my team as well, we don't really watch the stories on LinkedIn, for example. I mean, I know a lot of people do use it, but me as a recruiter, I've never used it. I mean, it's not Instagram where I'm just gonna go past my feed and see it like that. My perspective, I didn't really see a point of it, but I mean, there's people who do use it for marketing their companies, and that's completely fine. But in order to see those stories, you have to be obviously on your mobile to see it. But as recruiters, we're on laptops all day long, so I never actually do see any stories.
I'll tell you why I'm asking, because I saw various people working for famous brands, I'd say, or big companies. I will not mention the sex or the brands or anything like that. And they're treating the story section of LinkedIn, which is supposed to be a professional platform, like it's a dating app or their Facebook profile. Is this right from the point of view of a recruiter?
Well, I mean, LinkedIn is a professional networking platform. No, I don't think it should be used in that way. And I think it should be used more in marketing your company and things you're doing for that company. And even like if you're looking for a job and then maybe there are recruiters, you know, watching these stories, just put like a video up about yourself, and that's it. Like, you don't need to use it as a dating app. No reason to.
But I'm talking about people that took selfies. They even photoshopped the picture, and the selfies were more appropriate for Tinder than for LinkedIn. I even commented on a couple, so that's why I'm asking. I was really, I can't say upset. I was a bit upset because I see a professional, the only professional platform that's turning into a social media channel. Do you think this attitude can cause them or the companies they work for more harm than good?
Look, everyone can use their profile as they want to. But if you're working for someone and it's a respected establishment, then I don't think you should be posting things like that. I mean, you're not going to be taken seriously. There's no point. Use LinkedIn just for professional reasons. It's not a dating site. It's not Instagram. It's not Facebook. Just use it for your professional use only.
Thank you for that. Thank you so much for that, because I've been arguing with people for weeks. And I told them one day I'm going to have an HR professional and they're going to tell you. Now, another thing that got my attention on LinkedIn was a job post. I saw a job post a couple of weeks ago that made my hair spike. Yeah, the hair I have. That's why I'm bald now. The ad sounded something like, "We are looking for hungry souls," blah, 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 blah. And I actually took a screenshot of it. Is this the new way of recruiting in 2021, Emma? Looking for hungry souls?
It depends what kind of industry you are.
Regardless, unless you're Satan or you work for God or something, I don't see it as appropriate from my humble point of view.
Okay. So, for example, if we're looking at, if this post was towards sales representatives for a Forex company, I get it. I do completely get why they would post something like this.
Why?
And me and you have been in this industry for a long time, and we know how these sales flaws are. When they're saying we need hungry souls and stuff like that, I know it sounds really bad, but it is, most companies are boiler room kind of, it's a boiler room sales kind of flaw.
Regulated. Yeah, regulated boiler room, not
Yeah.
what boiler room was.
Of course,
Okay.
yes. And so when they're stating that kind of a headline, it's because they want that person who is going to apply for this job to be money hungry. I don't see why people shouldn't be money hungry. For example, like, I think we all want money. I mean, who doesn't want money? So I don't see something bad about that. However, I mean, it's difference of opinions. It depends on the company, what kind of sales floor they have. If you want a sales floor that's not so aggressive, then obviously you're not going to post a headline like that to find sales agents.
Yeah.
Yeah, it really depends.
But you know, an aggressive sales floor is not compliant because according to ESMA and other regulations, you cannot be aggressive. That's
Yes.
one. Second, are you recruiting a person or are you buying their souls? This was what pissed me off. You know, because you can say, I'm looking for money hungry people. Okay, I'm looking for something, but don't look for souls. You're not purchasing a soul. And if you do, you better pay for it, you know, and you better pay a lot of money for it.
Yeah, that, I mean, no. I mean,
that came from a CEO of a Forex company, Emma.
Okay. So
would you what does this tell you about the company? Would you recommend even going to an interview for that company that advertises like this, that they want to buy your soul?
Of course not. I mean, you would know that going into something like that, your stress levels are going to be super high. You and I have worked in this kind of environment, and for many years as well. So I know, you and I know firsthand how it does start. You know, you have targets. So I can go on and on and on and on about this specific thing. But look, it depends what kind of person you are. If you can handle the stress, I don't agree with buying a soul. I mean, no, you don't own my soul. But I can agree with a company who do say, yes, we want you to make a lot of money because it's going to give you money as well, not just us and stuff like. I get that kind of approach. But the two of an aggressive approach, no, I don't. However, yes, in a regulated company, there are aggressive approaches only because you have a certain target to reach, in a sense.
Or that your manager is a bit pushy because he has a target to reach. But anyway, I don't want to go into that. I was just I wanted to focus with you on the advert itself, if it's professional or not. What does a professional HR think about a company that advertises like this, especially the CEO of a company, Emma?
Okay, I think that it is a bit aggressive.
And unprofessional.
And a little bit unprofessional, yes. But for this person to post something like that, it depends from their also cultural background. So how we might say something as someone who speaks a different language and we have different cultures, we might see it as too upfront, too rude. But for them, it's not rude. It's how it is. Statement, like stating a point. So it depends. I can't really tell you if it's wrong and right, but in my opinion, I do believe that no, you shouldn't buy any soul, and let's be professional.
Exactly. Let's keep it professional. Right. Let's move on to happier things. How difficult is it being a recruiter for the financial industry, Emma, versus another industry?
Well, I haven't worked in any other industry. However, it has its challenges. And we are learning every day, obviously, new positions, new roles in companies start coming up now. So it's not difficult at all. You'd really have to understand this industry in order to be a recruiter in it, and in general, be an employee of this kind of industry. And you have to know every single department in order to really understand what you are recruiting for. So, yeah.
True. What is the most challenging part of the job?
I think the most challenging part is if we take it from the candidates who, let's say they approach you and they want the job, or if you're headhunting and you finally place them, and they don't end up showing up to their first day, or they don't show up to their interviews, things like that. It puts a picture on the agency as well, like how we have done, let's say, even though it's not our fault, but it does portray like
because you're on top of it.
Yeah, exactly. I think that's the most challenging part for them, getting to the interviews, going to their first days, and also being on top of things as well is kind of challenging. I also, on the first day of my candidates, I will ask them, how was your first day? Is there anything that, you didn't like, and should we discuss about it? It's not so challenging. It's part of my character and why I want to do it. However, I think the most challenging part is getting them to the interviews and getting them go to their first day of employment.
Yeah, true. Now, I know, and the staff turnover in financial markets is sky high. Why is that? What are the companies looking for, Emma? Souls. I got that. Some companies are looking for souls, hungry souls. What are most companies looking for?
Do you know what? I think these certain financial institutions who have a high turnover, I believe they're always searching for the next best thing. And I don't know if this is something that will stop. It depends on the culture of the company, and not all forex companies are like that. Not all of them are major turnovers and all of that. But we do see a big turnover in the sales floor, and that is because of the next best thing, who is more money hungry. And I guess, yeah, that's really what it is, the next best thing. I can't answer you why it happened, but I believe it's that.
Well, you do get some feedback, might be the pressure that the sales managers are putting on the team.
Yes, that as well. I mean, it's a big issue. When I was HR, I mean, I had women and men coming to my office, couldn't deal with that type of pressure and their targets. And in general, some were a very hostile environment as well.
Yeah.
So we also had to reflect back and think, okay, what can we do for us not to have this type of environment? Yeah.
There's another factor that contributes to that kind of environment: unprofessional management. Yeah, untrained sales managers. Because if you get a guy that's your top closer, it doesn't necessarily mean that person can manage a team of people.
Correct.
Yeah, and when you get your top closer and you put him to manage a team of people, you're going to have a surprise. The team of people will leave, and you will only be with your top closer, which now is not your top closer anymore. He's a mini god, mini boss, because he got promoted. So eventually you're left with nothing.
Yeah.
Fair enough?
Yeah, you're correct on that as well.
Right. These are, from my experience, from my point of view, a few of the factors that affect that. Now, what advice, what suggestion would you give to someone that is looking to get a job in the financial markets, Emma? Is it really worth it? Does it really pay out as much as people think?
Look, I mean, the forex industry is a really nice place to work. I mean, yes, we've all had the people who have already worked in it. Yes, we've all had our major stress levels, and it's been crazy, and maybe we've entered hostile environments and all of that. But genuinely, I think it's the best place to also work in. I've made so many friends from so many different countries. I know so many people. And I think, yes, it is a good place to start if you want to get into the financial industry in a sense. And advice for them to start, let's say, getting into this place, into these sort of places, is start from customer support. Go to a company that gives free trainings. If you can do a 2-week free training, doesn't necessarily, you don't have to get hired or anything, but go and experience it. I mean, that's how I ended up being in this industry. I had a 2-week training for sales, can you imagine? And I got the job. In the end, I was in customer support. I did that for like a month or two, but I knew it wasn't for me, and I knew I wanted to be in HR. But customer support really made me understand every single department. So if you want to get into this industry, the best way to do it is find a company that gives you a free training. This is the only way you're going to learn the ins and outs of Forex, like working in a Forex company.
All right. What sort of personality should they have? What should be their expectations? Yeah, as beginners, as rookies in the industry.
It's not about what kind of a personality you have. I think each department has its characteristic traits, let's say. Like, for example, if I'm hiring for the sales floor, I know that this person needs to have a strong personality.
And a hungry soul.
No, not hungry soul, but a strong personality to be able to deal with pressure. Because if you cannot deal with pressure, you are not for this industry. End of story. Even if you're in customer support, you need to deal well with pressure. This is in every single company. If you cannot deal with it, it's not for you. Go into a different industry, the beauty industry, even fashion industry is crazy as well. But if you can't deal with pressure, then you shouldn't be in this industry.
Right. So it's for hard people, basically, for very strong characters.
It did take me a very, very long time to get thick skin. But I think you do need a basis of also wanting to be a hard worker. If you want to work hard and work smart, then go for it. It's for you.
Right. Okay. Fair enough. Now, I have one last question for you, Emma, which was the hottest question a couple of days ago, and it made a lot of noise on social media. And I've also invited anyone that has something to say to the show. Do you think a firm can live without an HR?
Yeah, I mean, there are companies that don't have a HR, and the person that they report to is only their line managers.
Yeah.
But I do believe, from my background, it is good to have HR because, let's say, for example, if that line manager can't deal with a specific thing, then who does he go to? Is he going to take that issue home, and is he going to speak about it with his or her family? HR is kind of needed to set up, start up, structure your employee files, the mental health of the employees, your recruitment as well. And even better for a recruitment agency, if you don't have HR, that's great. We will do it for you, you know. But
that's the sales training in you.
Yeah. So I think, yes, it is good to have a HR department. But then again, there are big companies that don't. Sorry?
All right. But the company will eventually leave even without an HR.
Leave? The company leaves?
The company survives.
Oh, yeah, right. Yeah, of course. Of course it can survive.
This was the topic, and I had like 5-6 HR professionals jumping on the article and killing it, basically. You cannot live without HR. We are here to stay. You cannot get rid of us. Stuff like that.
You know, one of the biggest, there's a big company here in London. They don't have a HR department at all. And it's a 1.4 billion pound industry. He does not believe in having a HR department. He does it only with his line managers. And the recruitment is obviously done through the employees that work there and recruitment agencies.
Yeah.
It can be done, but I don't know if it can be done in the Cyprus market, to be honest with you.
I'm with you. Right, Emma, thank you ever so much for being with us today. You're more beautiful than usual today for some reason. And thank you so much for accepting the challenge. And I'm looking forward to the...
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
What's happening, beautiful people? Happy spring, everyone. Happy Monday. Good morning, America. Good afternoon, Europe. And welcome, everyone, to our live stream. How are you guys doing? I see we have some chatty people this afternoon. Hello, guys. Please try and behave during the broadcast. And if you have any serious questions, I'll be more than happy to assist. How are you guys doing? Let me know how you're doing in the comments box below. And please remember to absolutely smash that like, share, subscribe button and support us in delivering more great content. Now, let's get down to business, guys, and see what is happening in the markets on this beautiful Monday, 1st of March, 2021. We start the week with a busy economic calendar. We had the manufacturing PMI data coming out from a lot of European countries today, including the Eurozone. The overall sentiment was positive, with the Spanish, French, and German manufacturing PMI data coming out in the green. Also, the PMI in the Eurozone came out above expectations, but investors remained cautious still, keeping an eye on the ECB press conference that will start in a few minutes ahead of the U.S. markets open. In other news, the U.S. stock markets are expected to aim higher today after the House approved the $1.9 trillion stimulus plan on Saturday. Johnson & Johnson COVID vaccine got the blessing of the FDA over the weekend, giving the world the first single-shot vaccine. Oil dropped on the European trading session, trading below the $62 mark. And Bitcoin, guys, everyone's favorite, rises 6% as risk assets rally and enjoy supports from Citi Bank, worrying Chinese regulators. U.S. markets open, coming up. Right, and here we are, beautiful people. It's Monday once again, and we cannot start the week without Neil Wilson, Chief Market Analyst at Markets.com, straight from the heart of London. Very good afternoon, Neil. How are you?
Yeah, good, thanks. Yeah, it's a nice start to the week.
Nice Monday today. The lovely weather is all over the world. Now, big day for the U.S. markets, Neil, today after the House approved the $1.9 trillion stimulus bill. The U.S. indices are expected to open sharply higher today. Where does this leave the U.S. dollar for the week, Neil?
The dollar. Well, I think with the dollar, we've been looking at this move in bond markets. Really, it's all about the bond market at the moment. That's what's driving the stock market. And it is also obviously important for the US dollar. We saw that the RBA come in with the Reserve Bank of Australia. They came in with additional bond buying. So they're trying to keep a lid on this rise in bond yields that we've seen. We obviously saw the US 10-year up above 1.6% last week. But it's a trend that you're seeing across the globe. And I think the RBA blinked first, and it's trying to get some kind of control over this situation. It's obviously a little bit concerned by it. The Fed's signaled it's not worried, but that's just like a sort of red rag to a bull ride. I think the bond market's going to test the Fed and see what sort of pain it's willing to endure before it needs to do something. Maybe we're talking yield curve control. So all this is sort of playing out against backdrop probably of I think continued weaker dollar. I think you still see the dollar soften as really as risk-on currencies, if you like, come to the fore, including sterling, the Aussie, and to an extent the euro. I think the euro's still got room to rally to around 125 before it reverses course. But I think the dollar needs to just pull back a bit more. And I think, as I sort of said before, I sort of stick to my guns on the fact it's this certainly the first half of this year into Q3 the dollar should be weakening, and then eventually it will pick up again. But I think there's still room for dollar weakness still.
That would have been my guess as well, Neil, because, and correct me if I'm wrong, every time you see the stock market going through the roof, the dollar tanks. Is that right?
Well, yeah, I mean, there's definitely correlation, I think, as well as it's also, weaker dollar tends to support, a weaker dollar is sort of good for a lot of, for a lot of assets in general. It's good for commodities. It's good for growth, really. I think if you've got a weaker dollar, really strong dollar could be a problem for a lot of other assets and asset classes. So, yeah, I mean, there's definitely a linkage between a weaker dollar and stronger stock market.
Because looking at the charts right now, we're looking at the US dollar index on a daily chart. We're seeing it trading at 91,007,013 as we speak. We see the downtrend continuing. The downtrend started on the 21st of May, 2020, last year. And it didn't recover since. We saw a couple of very shy retests, almost retests of that 200 moving average to the upside. And now we see the dollar pushing a bit higher. As long as the price remains below that 200 MA, then the downtrend might continue. But I can't see any lower lows at the bottom of the chart, Neil. This is what worries me for now. So I'm expecting that stimulus package to hit the markets, and then probably we're going to see a reaction from the dollar. What do you think?
Yeah, I mean, I think obviously the stimulus is sort of baked in a sense into our expectations, but I just feel that there's probably there's room for the dollar to move a little bit lower still. I think really that could be driven by the euro, predominantly by the euro, given that it's weighting in the dollar index, and I think the euro will be one that just advances just that bit a little bit more against the dollar, into sort of, as I say, over the next few months and hits 125, and that should push the dollar index down to sort of maybe looking at 87 on that dollar index, a sort of 87 handle, and that's kind of where I'm at the moment.
Right. Okay. Let's hope that will happen. Now, before we go to the Bitcoin, to the good almighty Bitcoin, we have a great news. Johnson & Johnson got the FDA approval over the weekend with the first single shot vaccine. How great is that? Is this the hottest stock right now, Neil?
Yeah, I mean, J&J is doing well off the back of that. It's a positive for the stock. It's also clearly a big positive for the vaccination rollout. You're looking at a much quicker rollout into US. I think they're the first to approve it. I think Europe's got Johnson & Johnson as well, and UK. We've got these. I think also it's important. It's probably going to be good for the less rich nations that need to get this jab, and that will be important because vaccinations are it's fine. We're doing well in the UK, and we'll reopen the UK economy. But in order for global economy to be fully reopened, you need everyone, all the countries, to vaccinated. And what that also does is it will keep a lid on these mutations, because if the virus is running rampant in Brazil and South Africa, then the UK can't really, rich nations that have vaccinated their populations can't really fully reopen until they've caught up, and then you do have this risk, as I said, the mutations, and they're more likely to get mutations, obviously, when it's running rampant in particular parts of the world.
I'm wondering for how long this mutation will last. I mean, so far we have 4 or 5 vaccines, if not 6. Let's see how long will this last for. Right now, we saw Johnson & Johnson open higher today. It's currently trading at 160. Okay, so let's see. We saw that 200 moving average still pushing it downwards. But now, let's move on to the hottest asset for the last couple of weeks, the good almighty Bitcoin, Neil. It's currently trading at $48,328. And as we look at the charts, we can see it touching that 200 MA to the upside, okay, and potentially settling above that 200 MA. Now, China hates it. Citi Bank loves it, supports it, and today it's shot up 6%. Okay, trading at 48,354. Yeah, 6.5% as things stand right now. Let's have a quick look at a very interesting article. There we go. So Bitcoin rose nearly 6% on Monday as risk assets rallied after last week's bond rout cooled, and Citi said the most popular cryptocurrency was at a tipping point and could become the preferred currency for international trade. That's a very brave statement, isn't it, Neil?
Yeah, it is. I mean, I don't see why you'd make Bitcoin such a the key currency for international trade. It doesn't make sense. It's not very efficient. It's quite expensive. You've concentrated wealth in the hands of a few people, and we don't even know who they are. I don't particularly see that. I think what you need to be looking at is the digitization of fiat currencies. I think that's probably what we're going to be looking at. And as far as the international currency goes, I don't think you can do much better than the US dollar, to be honest. So I'm a bit skeptical about that, but I've been skeptical. I remain very skeptical of the actual use cases of cryptocurrencies anyway. But short-term price action, yeah, it's positive what Citi's saying. But at the same time, I think there's BCA research, I think, is out with a note warning people against touching Bitcoin.
I support it 100%. Retail traders should not be able to touch such a risky asset, Neil, without proving that they master. Yeah, they know how to trade. They know what this is all about. From my point of view.
Yeah, that's what we have in the UK. The FCA has stepped in and prevents people from trading crypto derivatives. So if you're in the UK, you can't trade Bitcoin on our platform. So it's all regulators that are looking at this. I've seen, I think ESMA's looking at sort of, the retail trading environment again. I saw the head of ESMA was on CNBC this morning talking about, the sort of what they're looking at, the sort of retail trading and the exposure to risks and zero commission sort of models, that kind of thing. So I think it's all part of that sort of story of, are retail traders protected? Are they exposed to too many risks? And what can the regulator maybe do about it? So I think there could be some regulation coming around trading some of these riskier stocks or cryptos in Europe.
Exactly. This would have been my next question, Neil, because I see, including Janet Yellen, yeah, she even, and the ECB president, Christine Lagarde, and the SEC, everyone is talking about the regulation because now Bitcoin is not a joke anymore. Yeah, it's not just an asset that's worth $3, $4, $5,000. We're talking about 50,000 US dollars for one Bitcoin. So in some countries, once again, you can buy a studio for that. So I do encourage the regulators to come up with something as soon as possible. Now, check this out. We even have China beating the Bitcoin. Check this out. Very, very interesting article. Bitcoin's 300% price surge since October has revived China's gray market in cryptocurrency trading, putting regulators on alert over financial risks and capital outflows as volatility spikes. China shut down its local cryptocurrency exchanges in 2017, smoothing a speculative market that had counted for 90% of global Bitcoin trading. Can you imagine the wealth in China? Now I'm tempted to say that apart from Mr. Elon Musk, China is controlling the Bitcoin. And still, China-focused cryptocurrency exchanges are not licensed on the mainland, but individuals can easily open accounts and trade online if they upload the details of their Chinese identity cards. You know, exchanges such as Binance and MXC bar the use of yuan and only allow trading between cryptocurrency pairs such as Bitcoin versus the dollar-linked stablecoin, which is Tether, USDT. Chinese investors can use peer-to-peer markets to buy Tether, USDT, using yuan, with payment made via bank cards or online transfers. This process does not violate any Chinese laws. So even though China is against it, there's still a gap in the legislation that allows the richest people or the people that want to do this to trade, okay, which I think is very clever. But are they banning it or they're not banning it? This is the question, because people can still trade.
Yeah, I mean, this is the whole problem, well, not problem, but certainly an aspect of the crypto market is that how do you ban it? You know, how do you actually, it began life in the shadows, and in many respects, it remains there. I mean, it's been legitimized and mainstreamed through the launch of the futures contracts and, investment by Tesla and PayPal allowing currency transactions and MasterCard and whatever. So there's been all that. But the thing is, it can. The whole point of it is that it's meant to exist outside the normal constructs of the financial system, because the idea being that the financial system is geared towards governments and towards or Wall Street, whatever. It's designed to be separate. It's designed to operate without. So whatever regulators do, it's going to be. There's only so much they can do. But of course, if you got the US. The US could simply ban all trading in Bitcoin on all exchanges. It could, effectively wipe out the market very quickly if it wanted.
Can you imagine what will happen if that's the case? What would the big boys say?
Yeah, I mean, obviously it would be very controversial, but clearly Janet Yellen's not a fan, and so there's no. I just go back to this idea that why would governments want to allow a private currency to take over the US dollar? The US government's not going to allow that. It's going to facilitate it a little bit, as long as it seems that it's quite small. It remains a smallish part of the market. Let's face it. I mean, $1 trillion is not that much in global financial terms. I mean, about 6 trillion is traded. The forex market, you get 6 trillion traded daily. So it's. I think the US government though will not allow a private currency to displace the dollar. That it's the dollar that allows them to control global finance. It allows them to use their sort of it's a weapon that they can deploy and through sanctions. And it's not something that they're going to give up, and I just don't see why they'd allow a handful of early backers of Bitcoin to somehow become the masters of the universe. I don't think that's going to happen.
Right, fair point, very fair point. Now, this week we have the NFP week, but I don't want to talk about it until we get the data on Wednesday, the initial jobless claims, and we have a date on Thursday anyway. So, Neil, Thank you once again for today. I'm looking forward to our date on Thursday, and let's see what's going to happen till then. Have a great week, Neil.
Okay, cheers.
Right, Neil Wilson, everyone, from the heart of London. We're coming back live in 30 seconds with the charts of the day, the signals of the day, and let's see what else is happening in the markets on this beautiful Monday, 1st of March, 2021. Stay tuned.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, and here we are, beautiful people. We're going to start with the economic calendar. Quick look at the economic calendar today. It's worth it, guys. It's really worth it. We have the Independence Day in South Korea. For what it matters, we had a few announcements today. We started the day nice and early with a lot of manufacturing PMI data coming from the Eurozone. We saw the retail sales in Switzerland coming out negative 0.5%, followed by the Spanish manufacturing PMI, which came out 52.9, 9 basis points above what consensus was expecting. We saw the Italian manufacturing PMI, which came out 56.9, just 1 basic point below 57, what consensus was expecting. We saw the French manufacturing coming out at 56.1 versus an expectation of 55%. The German came out 60.7 versus an expectation of 60.6. And the manufacturing PMI in the Eurozone, guys, came out 57.9 versus an expectation of 57.7. Everything was borderline today. However, these announcements matter quite a lot. And considering today it's Monday, they will probably give us a direction for the euro for the week. Right, we had the Italian CPI again coming out 0.1%. There was no forecast on this one, but it was way lower than the 0.7% that came out last month. We had the German CPI announced a few minutes ago, guys, 0.7% versus an expectation of 0.5%. And the manufacturing PMI on the US dollar, guys, 58.6 versus an expectation of 58.5. Again, borderline. ISM manufacturing employment will come out in 6 minutes from now, and the ISM manufacturing PMI as well will be released in the same time. In half an hour, we're going to have the German vice president holding a press conference, followed by a press conference from the ECB, and Christine Lagarde will take the stage at 10 minutes past 6 GMT plus 2. This is what's happening in the economic calendar today, guys. I'll give you the economic calendar for tomorrow, so you don't get confused. Now, quick look at top 5 things to know in the markets today, guys, and then I'm going to speed up to live charts and the signals of the day. So, number 1 on the board today, Australia leads central bank pushback against bond bears. The bond market volatility that dominated last week's trading has died, basically, with the first concrete sign of central banks pushing back against those pushing yields higher in anticipation of higher inflation. The Reserve Bank of Australia bought twice the scheduled amount of long-term bonds as its regular quantitative easing operation overnight, following on from its intervention to keep 3-year bond yields at their target levels last week. The European Central Bank will also publish their details of its bond purchases last week, which should show how keen the European Central Bank was to avoid what it calls an unwarranted tightening of financial conditions. The Federal Reserve's John Williams and Lyle Brainard may both weigh on the bond market developments in speeches at 9 a.m. Eastern Time. Right, number 2 on the board, guys. China recovery plateaus, but Japan, Europe pick up speed. ISM survey due. The economic rebound underlying that bond market sell-off appeared largely intact in the latest round of business surveys around the world. The Japanese Purchasing Managers Index rose to its highest in over 2 years, while South Korea posted another strong month of exports and imports. Final PMIs for February were also revised up across most of Europe, with the Eurozone manufacturing posting its best reading since early 2018 at 57.9, and the UK manufacturing PMI being revised up to 55.1. Number 3 on the board, U.S. stocks set to open higher after the House passes the COVID relief bill on Saturday, guys. U.S. stock markets are set to open higher against the calmer bond market backdrop, able to focus on the progress of the administration's $1.9 trillion stimulus bill on Saturday. Dow Jones was up almost 1%. The S&P 500 was up 1%, and the Nasdaq futures were up 1.2% pre-market open. I'm dying to see the charts, guys. But before that, let's move on to number 4 on the board. FDA authorizes Johnson & Johnson vaccine, the first single-dose vaccine in the history, guys. The reopening process got a fresh boost at the weekend as the Food and Drug Administration gave emergency use authorization to Johnson & Johnson's single-shot vaccine against COVID-19. The Johnson & Johnson drug is the third vaccine to receive EUA in the U.S. and promises to expand the supply of safe and effective drugs against COVID-19 significantly. Preliminary data suggests it's also largely effective in stopping the spread of the disease by people who don't have symptoms of the disease, an important source of transmission. Elsewhere, reports suggested that Germany is to consider its decision not to approve AstraZeneca's vaccine for use by over 65ers, a decision that has slowed the rollout of vaccines in Europe's largest economy. And finally, guys, number 5 on the board, crude oil resumes rally as Iran rejects talks with the U.S. Crude oil futures resumed their upward march against a backdrop of broader risk appetite. Also, supporting the move was news over the weekend that Iran had rejected an offer of direct talks with the U.S. over a return to the 2015 UN-backed non-proliferation agreement. Why do they have to make it so complicated? Both the U.S. and Iran are currently in breach of the agreement, with Iran refining uranium metal that analysts say can be adapted for use in nuclear bombs, and the U.S. applying sanctions that hurt badly the Iranian crude exports and the rest of its economy. Right, now let's move on to the charts of the day, guys, and see what is happening with the markets on this beautiful Monday. We're going to start with crude oil WTI, guys, on a 60-minute chart. 61.59, guys, 30 minutes into the U.S. trading session today, with crude oil pushing lower. RSI stochastic still pointing downwards, not showing any signs of strength. Let's keep an eye on that 200 moving average and see if the price will push to the downside and settle somewhere below it. Okay, 61.50 is the key price where that 200 MA is. 61.52 is the current price of crude oil. Right, 120.45 for the euro this afternoon, guys, which has been tumbling since 8 o'clock this morning, since the markets open. We're looking at 139.22 for the pound, which again was tumbling today, trading below that 200 moving average and way below that 50 moving average. Once again, RSI stochastic both pointing downwards. So we might see the European currencies tumbling a bit. We're looking at USD JPY still in an uptrend, guys, and even though the US dollar had pushed back a bit today, it's still on an uptrend with the RSI trading way up in its upper section, and stochastic is turning around as we speak, but nothing really big has happened just yet. But keep an eye on that 50 MA, guys, on that 106.43 level, as we might see a retest of that 50 MA to the downside. From there on, if the RSI remains in the upper section, then we might be looking at the continuation of the uptrend. Right, we're looking at the Aussie dollar, guys, which just like the European currencies tumbled a bit today. We see it strengthening as we speak. 0.7754 this afternoon for the Aussie dollar. Still in a downtrend though, and subdued by both 200 and the 50 moving average. So if you're planning to go long on the Aussie dollar, guys, bear in mind it might continue the downtrend and it might bounce off the 0.7829 level where that 200 moving average is. Moving on, we're looking at the USD Cad, which is currently trading at 12666, guys, so 126.66 for the USD Cad. Again, it's we might see a retest of that 200 MA to the downside. We're only inches away from that, but the RSI is turning around somewhere halfway around the 44% mark, and stochastic is turning around from the oversold levels as well, indicating we might see a rally, guys. Okay, USD Cad. Remember, This is called a gold cross. Yeah, the cross between the 200 and the 50 moving average, and the candlesticks already settled above the 200 MA. So looking at it from the Elliott waves point of view, guys, we might see an uptrend for the US dollar. Now, quick look at the S&P 500, guys, which opened to the upside today. Positive opening for the S&P, pushing all the way up to 3,876 in a few minutes after the U.S. Markets open. 3,872.56 right now. Yeah, with the RSI stochastic still shy, but the price is settling slowly but surely above the 200 moving average, indicating an uptrend. Now, let's not forget the stimulus bill, guys, that was approved on Saturday. Okay, that should give the markets a bit of a better boost than what happened till now. There we go. We're looking at Dow Jones Industrial Average opening with a big gap to the upside. 31,496.75 for the Dow Jones Industrial Average this afternoon, with the RSI stochastic again still shy, not crossing the 50% mark. Currently trading at 55%, but there is great potential to the upside, guys. Moving on, we're looking at some stocks for today. Apple opened to the upside, $124.91. Amazon opened better, I'd say, but still it's dragging as we speak. 3,118.03 for Amazon. RSI is very, very shy, trading at exactly 50%. And stochastic is pointing upwards, but still very, very shy. It's still early days, early hours of trading on the US markets front. Nvidia, guys, open to the downside, currently trading at $547 on the dot, with the RSI stochastic again trading below the 50% mark, indicating a potential weakness in the markets. The US dollar index is currently trading at 91.070. Very undecided. We see a positive, a bit of a push here. We see a bit of positivity on the US dollar index futures this afternoon, but the markets are very, very choppy up there. So give the markets a bit more time to settle, guys. It's still very early to take a decision. Now, gold is currently trading to the downside, $1,733 for gold this afternoon. We were all hoping for a rebound on gold. We saw a retest of that 50 MA and an amazing rally last week. But today, during the European trading session, we saw gold futures dropping, and they will probably continue the downtrend if this key point will be broken to the downside, 1,722.55. Now, what else? Light crude Brent oil futures, guys. Again, we see a retest of that 200 MA to the downside, 64.53 for Brent oil futures this afternoon. Silver is currently trading a bit higher at 26.94.95, somewhere there. Still early to say what's going to happen. Tesla is trading. It opened a bit higher, but it's heading lower as we speak, guys. $692.20 for Tesla, with the RSI way, way below the 50% mark, indicating quite an important downtrend. Facebook opened to the downside, guys. $259.13 for Facebook this afternoon. Alibaba as well. No, Alibaba opened higher, but it's heading downwards now at $240.35. And finally, guys, the mighty Bitcoin, which is currently trading at $48,351 on the Bitfinex exchange. We see it testing that 200 MA, and the question remains if it's gonna bounce off that 200 MA, where it will head and where it will stop to the downside. Will we see 40,000 reached anytime soon? Will we see 30,000 reached anytime soon? Looking at the RSI stochastic up in the overbought levels, okay, there is potential for a bit of a correction on rally that Bitcoin had recently. In the same time, we're looking at Ethereum, guys, trading at $1,532.20 as we speak. Very similar trajectory with the Bitcoin's RSI stochastic way up into the overbought levels. We see the 200 moving average that's inches from the from the action price right now. Let's see what's going to happen. A retest, and then it's going to continue the downtrend, or it will settle above. Right, let's have a quick look at some trading signals provided by investing.com. And guys, if you want more trading signals, please remember that our sponsors at markets.com have an amazing trading platform that shows you the trading signals straight on the web platform. So it's definitely worth having a look at. Meanwhile, we're looking at Euro USD and GBP USD with strong sell indications on 3 and 4 time frames. These strong sell indications remain there since this morning, but the euro is dragging a bit. USD JPY and USD CHF, we see signs of strength on the USD JPY and USD CHF with 4 strong buy recommendations for USD CHF and only 2 strong buy recommendations for USD JPY. The Aussie dollar seems to be doing a bit better after the US Open today with strong buy recommendations on a 5-minute and a 15-minute chart, but the daily remains a sell and the hourly remains neutral. The euro, strong sell indications on 3 of 4 time frames versus the pound. The USD Cad is very undecided, guys. The Kiwi dollar seems to be strengthening versus the US dollar with 2 strong buy indications on small time frames. The euro, strong sell on 3 out of 4 time frames versus the Japanese yen. Now, the pound, guys, versus the JPY tends to be weakening, and the pound versus the CHF tends to be strengthening today. Quickly look at commodities, guys. Let's see how investing.com sees commodities this afternoon. We are already over half an hour into the US trading session, so the markets should have stabilized by now. We see gold in a strong sell indication on all 4 time frames. Silver, very undecided. Copper, strong sell, and the daily remains a strong buy. Crude oil, WTI, and Brent oil fell into 3 out of 4 strong sell positions. Okay, the daily remains a strong buy. Natural gas entered 3 strong sell recommendations, and US wheat, guys, is weakening right now with 3 strong sell recommendations from investing.com. Right, this was it from my side today, guys. Join me again tomorrow, same time, same place, for an incendiary interview with a very, very special guest of mine. Until then, remember to trade responsibly and may all your trades be in the money.